Welcome back, everyone, to another ADP jobs report coming out within the next minute here. We're going to get continuing claims today as well. And then, of course, on Friday, we'll have a full-fledged jobs report. These are pretty big catalysts for the Federal Reserve. They like paying attention to jobs because they know once they start causing cracks in the employment market, you're really running into some big old poopy doopies. And nobody likes running into big old poopy doopies. But it's entirely possible that you get some bad news. So let's find out. ADP employment report shows an increase of 150,000 jobs. That is, and the prior was revised up slightly, it looks like. Let me get a little bit more detail here and to see how that compares to expectations. So, ADP jobs, we were looking for 165, we got 150, and then we had an upward revision of 5,000. So let's go through the actual ADP report. And let's also see how the queues are moving in response to that. Queues not really moving at all, actually, in response to the ADP employment report. Let's get the actual report as soon as it pops up. Hasn't even popped up on their website yet. Okay, no problem. So, waiting for that data to pop up, but it looks like they've already got it, so let's listen in over here.
Medium as well as mostly in medium and large size businesses. By industry, well, we've seen this before. Leisure and hospitality, 63. Construction doing a bit better. Could be a lot of government construction jobs there, or private sector jobs hired by the government. Professional business service, 25, and trade and transportation. These are ones we've seen continuously. Resources and mining down 8,000. This may be the biggest and most important news here, though, is the median wage. They use actual data from millions of paychecks, and they find that it's down a tenth in both the job stayers and the job changers, plus 7.7%. This data, I think, is very good. When I look, Joe, at the difference between the BLS private sector payrolls and ADP, it's plus or minus 77,000. And in the last year, they've been a little bit light relative to the government, but the government data is yet to be revised. The ADP will not. So there you go, Joe.
All right, Steve, stay with us. Let's bring in ADP Chief Economist Neela Richardson. If I was going to look for a report to sort of...
They gotta embargo these reports because somehow they get their hands on them a lot faster. But that's okay. Basically, embargoing reports is, like CNBC will get the report early. They'll probably write it up last night, and they're like, here you go, here's the report. And then they just don't report on it until, 5:15 a.m. when the report actually comes out. But here's the report now that's finally up. Construction did grow 27,000, lost in manufacturing, lost in natural resources. Remember, you also saw Tesla manufacturing go down as that productivity and output decreased. You had some layoffs as well. You've got service providing over here. Information lost about 3,000. But otherwise, every other sector grew. 63,000 in leisure hospitality. I do wonder how much of this is seasonal. There is a possibility that you could have a substantial amount of seasonal hiring in the summer that potentially goes away going into Q3. Looks like small businesses, as usual, are just getting reamed here in this economy, which really sucks because it's sort of the bread and butter, salt of the earth, the small business entrepreneurs. But it's so hard right now with how high interest rates are and attracting customers against the big corporate galooths. And medium establishments and large establishments hiring between 88,000 and 58,000, whereas small are just sitting at 5,000. Really rough. You've got the pay changes over here. Actually, let me try to get the last report as well. I like looking at the history of these reports and then comparing them. So let's see if I can get best reports. Let's see here. No, it doesn't actually want to let me go back. I can pull it up on my iPad in a sec, though. Yeah, one of the cool things is just seeing sort of a change over time. There we go. Change over time. This is what I was looking for. So this is actually quite convenient. They throw it into a chart for us. Oh, I like that a lot. So you can see here that job changers trend is still well above the job stayers in terms of an increase in pay. Zoom out a little more. But it certainly looks like things are normalizing back to what you saw. Whew. I guess when I say normalizing, it doesn't actually let us go too far back. It only lets us go back to about December of 2020. So, but certainly you've seen this hump flattened out substantially. Okay, very well. So, looks like the biggest wage gains are going to education and healthcare and leisure hospitality. Lowest wage gains are going to information and other services right now, as well as, of course, those small businesses being able to offer the absolute lowest change in annual pay, whereas everybody else is offering substantially more. So it's those 1 to 9 employee businesses that are really getting hit hard here. Let's listen in to see what other commentary there might be here.
The second half of 23, and now the drops have moderated. And what's interesting, though, about what Neil is saying, I don't see, Joe, how you get, if these numbers are right, 150,000, there shouldn't be much rise at all in the unemployment rate from there.
Yeah.
Neela?
Yeah, just to continue with that line of thinking, we did see percentage point declines last year in year-over-year pay growth for job stayers. We're not seeing that anymore. It's edging down. And our contention when we look at the data is it's likely not to get back down to pre-pandemic levels. The economy has shifted. The demographics are not in the favor of seeing year-over-year pay gains around 2 or 3%. So if you think of a world in the future where year-over-year pay gains are elevated, it does make the job harder for the Fed. They can't rely on basically flat year-over-year gains in some industries. That's not happening.
All right. Steve, thank you. Neela, were you up late, carry the 3 minus the divided? I mean, were you, when did you find, you didn't do that? It's like homework, is it? It's like getting a paper done? When did it have to be in? 8:15. Had to be in at 8:15.
I always get a good night's sleep for you, Joe, so I can be sharp in the morning. So we make sure that happens.
AI would have given you 150, I'm sure. I'm almost positive. Right?
Likely, yeah.
Right, that's the future. All right, call us with the Friday number if you figure that one out. Thank you.
Will do. Thank you.
Have a good Hey, what is it, Steve? What are we looking for exactly?
We're looking for 200, right on the button.
Okay, exactly 200. All right.
Okay. Thanks, Steve. When we come back, another rapid-fire round of economic data. We're going to get weekly jobless claims in just a few minutes. Don't go anywhere. Plus, tens of millions of Americans hitting the road for July 4th. What can they expect at the gas pump? We're going to ask an expert from Gas Buddy. Stay tuned. You're watching Squawk, and this is CNBC.
Okay, got it. So to clarify, it looks like we'll actually be closing, the stock market will close early today, but will be completely closed tomorrow. So very interesting. Little confusion there is. For a moment, I thought we were going to have a half day tomorrow, and not today. But no. The half day is today, yeah, let me move that really quickly. So, and then July 4th will be completely off. Got it. Okay, though that's going to be a little boring. So that means we're going to lose a day to trade. That's all right. So that's interesting. So that means when we close today around 10, we're really going to be closed until 10 California time. We'll really be closed until Friday. That's going to be very interesting, which means we could have a new presidential ticket by the time the market reopens. How disappointing. I love sort of trading events like that. Oh, well. Or at least news like that. All right. Yeah, if you haven't seen it, it's looking substantially more and more likely that we're getting a different president on the Democratic ticket. So we'll see what happens. But anyway, all right. So ADP, I mean, really, it doesn't seem like this is any kind of substantial shock here. I mean, getting 150 on a 165 read, this is a nominal move. So 165K expected. Let's write this down. Expected for ADP. We hit 150 with a 5K revision to 157K with a plus 5K, I should say. Plus 5K revision to 157 for the prior month. Small businesses most affected and least able to provide pay gains. None of that seems like a surprise. And then leisure, hospitality takes the bulk. I think it was, if I remember correctly, 68,000 was what they came out with. Oh, let's see here. Ay, ay, ay. Where is it? 63,000 was the number. Okay. It's the bulk with 63,000. All right. So, wow, very interesting. All right, so let's take a little bit of a peek at what's going on with the preview here. So you've got Tesla that's behaving very interestingly here in the pre-market. It ran all the way up to 240. It's got a really massive resistance point right here. And there are plenty of reasons for it to get rejected. But if it breaks through, it could be a very aggressive breakthrough. So let's see what happens. I think that's what a little bit of the pre-market's trying to predict, is some form of breakthrough here. Although the pre-market's generally really bad at telling you what's going to happen in the day. It's sort of like a great FOMO tool that I found that the broker-dealers are able to hit people with really wide spreads on. You know, because if you're FOMOing because something's falling or something's rising, the spreads you're willing to pay are substantially greater in the post-market. So it's a smart strategy by companies like Robinhood to really milk you for some more dollar dollars. But anyway, you've got Bitcoin really losing the 61.7 line, which is a big deal. Now, we've lost it before, and we're sitting at the 61.57 line or region right now. And I'm very curious to see if this means we're going to push back all the way down to 58,000 again, or where we're going here. So we'll watch very closely what's going on with BTC. It certainly is a little bit of a negative omen for the market. You get the Qs rotating down a little bit right now as well. And you do have the unemployment claims figure expected to come out within the next 3 minutes here. We're looking for 235,000 on unemployment claims. Let's go ahead and write this down. Come on. Okay. All right, here we go. So that was the ADP jobs report, ADP jobs. And then we're going to go to unemployment claims. We're going to go with 235K expected. And we're looking for continuing claims of 1.84 million continued expected. Or I should say continuing claims expected. All right, so we'll see what we get there. Let's take a peek at how where the moves are this morning. So this morning it looks like you've got Nano Dimension, short Bitcoin, Etsy, Dell, Neo, Tesla, Plug Power, SunPower, and Enphase. All of these are some of your green movers here. Solar Edge, Palantir's up there a little bit. Looking at the downside, you've got DJT at $31, Embraer's back to 25, Coinbase falling, Nvidia falling, and then some other miscellaneous, the ARM, the AMD, and so on. So, no, claims actually come out in 2 minutes, so they're not out yet. And something to know about unemployment claims is, yeah, if you got a really big move up in unemployment claims, you know, some people are going to claim, oh, this is going to cause concern at the Fed very rapidly, and they'll have to cut very rapidly. But then you also have the concerns that you might be in a recession. So, which, you know, at some point, too high of a number is not that bullish anymore. What you really probably want is something that's slightly higher. Something that shows the Fed they're doing their job, but not something that's going so extreme that, you know, they've broken the economy. So we'll see what happens. But let's go back to the Qs here just to keep an eye on the Qs, BTC, and otherwise, and we'll get to see how the market moves. You can see here at the 8:15 release, we didn't really get anything here on the ADP employment report. Continuing claims are out in about 30 seconds. So let's see here. Let's see. All right, here we go. 10 seconds to go. 10 seconds to go. And then we're looking again for 235 on initial and 1840 on continuing. Here we go. 238 and 1858. So only slightly higher than expected. So again, instead of 235, result is 238K, pretty nominal. And then we have a result of 1858 million versus the, 1.858 million versus the 1.848 or 40 expected. So a nominal boost there. It's a really nominal.
Revisions to come shortly. 238 is still rather well behaved when you consider that this would be the third month in a row we're in the 230s. Now let's look at continuing claims, a different story. Our last look on continuing claims, we're at the highest level since November of 21, and it's out at
It makes it sound like it's a big deal. It's so close to expectations. You did get a 1,000 revision up on the unemployment claims. And the continuing claims, you got a negative 7,000 revision. So really, you didn't really go anywhere with this data. The Fed's doing their job, apparently, and you're seeing a soft cooling.
November of 21. But what's interesting here is this is now the fourth consecutive week above 1.8 million. Trade balance coming out. We know the trade balance is a deficit. We're expecting a deficit, the red ink around 76 billion, 75.1 billion, of course, with a minus sign in front of it. Subtle revision to last month. I guess what's noteworthy here, there's been a lot of benchmark revisions here, but we finished last year basically with 3 or 4 months right around minus 64 billion. We came in this year at minus 66. So once again, it is starting to grow a bit. And we need to pay very close attention to this. Not only does it give us an assessment of demand globally, but of course it lets us know potentially how the U.S. ultimately is dealing with the export-import situation. The imports seem to always run a little bit more aggressive than the exports, although both toy with records. We're not an export-driven economy like China, like Japan. We are, for the most part, a consumption economy, and much of the problems in China would disappear if they only could fan the flames of consumption a little bit stronger. Interest rates, Joe, you're right, they're down a bit on the long end. But let's really look at what we're dealing with here. We've nowhere near 4%. We're nowhere near 5%. We're smack dab in the middle in an election year where tax cuts and deficits and comparing one administration to the other is...
All right. So you're going actually deeper into inversion right now. The 10-year is down 1.9%. The 2 is up 1.7. So you're getting a little bit of a widening of the yield curve here. A little bit more sort of a recessionary concern. None of these numbers really suggested that, but whatever. What you do have right now in pre-market is a bit of a sell down on the Qs. You've got, I'll tell you, this Bitcoin omen is disgusting. Generally, I trade following what BTC does. I don't know why it works the way it does, but I generally listen to it. But as you can see, the Qs are falling here, following Bitcoin down. And it looks like Tesla is trying to leg down a little bit here. Keep in mind, it is up 1.5% in the pre-market. It's not up the 2.5%, 3.5% it was up an hour ago. But it does seem to be rotating down into the open. Now, whether or not, this is like people taking profits for July 4th, or, if people are thinking that there was a lot of pull forward in Q2, I don't know. Or people are just worried about sort of the technical resistance that we have today. Who knows? And it doesn't really matter. We'll find out when the market actually opens what's going on. But otherwise, it seems like Coinbase is sitting right at the 223 line. There's a pretty big line here. You can see it's one of the last lines I have other than, I think, 218. Yeah, and then I got a 218 support for it. And then I kind of lose support for Coinbase. So if BTC keeps falling, oh my gosh, look at that leg down. We just dropped under 60K. If BTC, oh, it's back up. It's very volatile. There you go. If BTC keeps dropping like this, it is, I don't know, to me, it's not solely a BTC issue. It is a market-wide risk signal. So not very excited about that. Remember, there are easy tools for shorting BTC. BITI is an example of that. About a month ago, I suggested, hey, it might be a good idea as a risk hedge to short BITI, and I got a lot of hate for saying that. The darn thing's up 10% in the past month and up 3% in the pre-market here. So, sometimes I guess falling victim to the hate in comments is a bad idea because there could be something to the strategy.
They're conservative, but yet when they get in power, they don't seem to really act on those principles. I don't know if we need a third party. What we need is a party that delivers their message. And I will say one thing about Trump. People could say,
I love this idea of people like, oh, I'm sticking with Tom Lee. It's like saying that is just like, la, 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 la. There's nothing that can go wrong. It's only going up. I mean, that's fine. You can delude yourself like that. But this idea that you have to pick sides is relatively delusional in the stock market. You can pick ideas from all different aspects, and I suspect that's why you're here. But, it's like this isn't like you're voting for Biden or Trump. This is like everybody's trying to calibrate their portfolios in a way that they feel most comfortable in markets.
Both administrations, the Trump and the Biden, knew how to spend. We know that. Steve Leisman joins us again with more on the data and some Fed news.
I'm going to get some coffee.
With Rick now, Steve.
Well, I just wanted to offer another perspective to something Rick said.
Thank you. Thank God. Thank God. I was going to stay quiet just because I didn't want to start a riot.
This is the way it always starts.
Well, I offer it gently and just for consideration that people may say they want a deflationary period, but I don't know how many people consider that generally in a deflationary period, incomes go down too. Now, Rick and I may agree maybe short term. I think there's a good argument that if you restore the prior supply chain situation that we had before the pandemic and the prior competitive situation before the pandemic, that indeed prices could go back closer to where they were before the pandemic on a short run basis. But I would just urge people not to wish too much for a deflationary period, because in that period, your prices go down and your incomes go down. And we have two examples of that. One was the Great Financial Crisis.
Yep, I've mentioned this a lot. You don't want to wish for deflation because it is actually really poopy doopy.
On the jobless claims numbers, Rick already said this, we're towards the high side, but not towards the red flag side, I guess I could say. I would think 250 or above would be where you might get concerned. You have a 1.2% unemployment rate or unemployment insurance rate, and that's pretty much where it's been. As the number of people employed goes up, well, the actual number of unemployed insurance becomes less concerning. And I'm not going to say anything about elections or anything like that, just that almost every study has said that tariffs are paid by the people domestically, not by those companies overseas, though it may pressure them.
Go ahead, Rick.
Sure.
All right, I'll tell you what. Here's the issue with tariffs, okay? That you say we're going to just pass it along. I couldn't agree more. But my counterpoint is, look at what the world has been without them being the driving force of any type of revenue. Do you think we should be bragging about $35 trillion in debt? Like the other side of the equation isn't anything to strive for, to throw a flag up the pole and call success. Maybe going the other way would be better. Pass it on. We pass everything on.
That's fine, Rick, but just don't sell it as something being paid overseas and something not raising prices and not essentially as a tax increase. It's fine. The public can decide, or the government can decide with the public's consent, I assume.
The tax increases they want to bring without the tariffs. The other administration talking about tax increases too.
Right.
I don't understand the difference. Prior to income tax,
the difference
country
is
paid for its bills with tariffs.
But one is called a tax increase. The other is essentially lied about
call
as
it
not a
anything
tax
you want.
increase.
Tomato, tomato. Both of them aren't going to be
Okay,
generous
Rick.
to us with all this debt.
If that's
And
the way you
why
want to do it,
nobody
then it's
likes
okay to make
deflation.
things up.
Nobody likes deflation because when you're in debt up to your eyeballs, it exaggerates debt. But
This is true about debt.
That's
see
another
other
reason
people
not to like deflation.
affected, maybe they would like a little deflation, not crisis era deflation. Why does it have to be like a little, none, or a ton?
The problem is you can't have one form of deflation without the other. One form of deflation leads to crisis deflation.
Discussion about why some prices have not gone back to where they were before. And we really come full circle.
Let's
Rick,
ask Elizabeth
which is this
Warren. It's because of gouging.
Well, no.
and
Let me finish, Joe.
anti-capitalism.
Rick, let me finish.
Okay.
Remember what I
All
said. Prices can go back. Prices can go back to their old level if we restore the competitiveness and the supply chain of the pre-pandemic era. Tariffs work against that, Rick. If we want to pay higher prices, we want to have. If we want to protect.
Globalism reversing out pushes prices up, but you know what? We're going to be better off. Sorry.
You call it.
So we pay.
You call it
higher
globalism,
prices,
Rick.
But
I call
what's
it
the alternative.
I call it capitalism, Rick. The idea that people have an ability.
With our enemies.
I call it capitalism, Rick.
I missed this. Now, I want to see what.
Rick, that.
Hold on. No, we're done. We're done. But I want to argue with you.
No.
This is not what you were talking about. You were talking about something totally different, I think, than tariffs, weren't you? No, I don't want. I'm kidding. I don't want to argue with you. Not before
Nobody
Independence Day. We got to go. And thank you too. I'm sorry to cut you off. They were screaming at me in my ear to do that. I can just. I like watching that. Do you like watching that? Because it's not.
I mean, I kind of enjoy it too. Like in a weird way, it's kind of like Schadenfreude, you know? It's like, no, leave it on. Like, this is so ridiculous. Like, leave it on. I get Rick Santoli. He reminds me very much of just a true money kind of person. You know, somebody who's fed up with the national debt, the debt spending, the BS of politics. Somebody who's just keeps it very real. And I respect that. However, it's also, unfortunately, disconnected from the reality. So it's like you have somebody who's trying to keep it real, but then it's also disconnected from reality. Reality is we deficit spend. Congratulations. Is it a rigged game of fiat? Yes. That's what government does. So congratulations. You have learned the game. And I think once you learn the game, you realize that in the long term, now this is going to piss some people off, but you know what? I've stopped caring, so I'm just going to start throwing it out there. In the long term, it's going to be almost impossible, in my opinion, for governments to actually utilize a sound currency like a Bitcoin or gold, which is why they left the gold standard in the first place, because it doesn't allow them to deficit spend. And that means any candidate who goes against a real money candidate will always get voted into power over a real money candidate because they'll deficit spend more. They'll give more stimulus checks. They'll give more money. The people don't care about long-run sound money principles en masse. You might care, but en masse, people don't. And so what ends up happening is you end up getting screwed with deficit spending. And so that's what the environment that you're in. And so I think what I've just described actually weakens the long-term bull thesis for something like Bitcoin, which is just being transparent about it. I could be totally wrong about it, and it's fine, because trust me, I agree it is better, but I don't agree is going to happen. So I agree with the tenets of Bitcoin. I just disagree that governments will ever let it happen. So but I just look at the government and I go, I realize it's a rigged sham, but it's a rigged sham that probably has decades to centuries left in it before you get the next collapse of civilization, and I'm not going to worry about that.
Well, Andrew, I think, that the Northeast gasoline supply reserve had been sitting there, had been costing taxpayers $200 million in the last decade to maintain. I mean, something like this is apolitical. Trump tried to shut it down. Congress now has required Biden to shut it down. The value of that gasoline, $98 million. I really wish they would have done this in 2022 to shut it down. Because
what about El Salvador? What about El Salvador? What's the GDP of El Salvador? Like $40 billion? So in other words, NVIDIA stock farts an El Salvador every single day. El Salvador GDP. $32 billion. So your argument, I mean, hold on. Every time NVIDIA moves 1%, it farts an El Salvador. And so if the defense of Bitcoin is, well, El Salvador's using it, congratulations. A country whose currency was completely worthless went to latch onto and hook their wagon onto something that they can consider stable for now. Try to right-size the balance sheet. Do the right thing. Use real money and a balanced budget to correct the government. That's fantastic. But what do you think happens as soon as the budget gets balanced again? You're going to vote out the real money people. You're going to vote in the deficit spenders. They'll create a new currency, El Salvadorian currency, peso 2.0 or whatever, and they'll just repeat the same damn cycle. So El Salvador is a wonderful, a blip of an example of what should be, but not what will be. That's just my take. I don't know, sorry, it's the unpopular opinion, but what about El Salvador? Come on, $32 billion economy. It doesn't freaking matter. It legitimately matters zero. So, yeah, but El Salvador also uses crypto or Bitcoin as an official currency. That's why it's coming up. Yeah. But Bitcoin is decentralized. Brandon, nobody cares. I'm sorry. It doesn't matter. Like, I understand people are like, oh, but I don't want an intermediary. I want control. That's fine. They're always going to be reservists who are like, look, I want some gold in my vault. Just like you want guns in your desk and under your pillow or whatever. That's fine. That's always going to be, to some extent, a preservationist mentality. And that is totally okay. It's a hedge against the system. The system is rigged. So I don't blame that hedge at all. But is that en masse going to change anything? Is everybody all of a sudden going to get paid their salary without an intermediary? Is everybody all of a sudden going to, solely transact in Bitcoin without a convenient intermediary? The whole point of the intermediary is to make things faster, cheaper, more efficient. Have somebody to dispute a transaction with if you need to dispute a transaction, somebody to give you some security, and people are willing to trade off some control for some of those features and benefits. This is, again, I'm not arguing against Bitcoin as real money. I get that. I just don't think that governments are ever going to go in the direction of real sound money again, because they've had a taste of the sugar high that you get from fake, phony fiat. The whole game is rigged. The fact that we need to send another 2 GDPs worth of weapons to other countries around the world, and we just run the printer a little more, the digital printer, and then we can, here's $80 billion out of thin air. The fact that we can do that actually gives America fantastic power. I'm not saying that's righteous, but it is. So there's reality, and then there's what we think an idealistic world should look like. And I think the sooner we recognize reality is sometimes far removed from idealistic hopes and dreams, and when we start realizing, okay, that's probably the direction we're going to go.
One big reason.
All right, what do we got over here? Let's jump on over to the doomers. Let's see. CPI consensus? Yeah, sure. Let's see here. So, I think that's on the 14th or 13th, something like that. Let's see here. Okay. Let's see here. CZ is a scam, dude. Money laundering scam. That's why he's in prison. He got a sweetheart sentence though. Okay, consensus on CPI month over month is 0.1. Month-over-month core is 0.2. Year-over-year is 3.0. Year-over-year core is 3.4. It's actually set for 7/11 CPI data release. Yeah. So, really interesting. Somebody, Scott says, I like anarchy, but true anarchy will never happen. Well, yeah. I mean, a government-less society. Yeah, because what would happen is you would end up having clans, and you would essentially devolve into tribal warfare until somebody collected all the guns and then, you know, tried to have a larger clan than everybody else. And then the large clan with all the guns would create a set of rules, and then, you know, try to give some power back by allowing people to vote for clan leaders, and then, oh my god, you'd have government again. So like the anarchy almost always defaults into some form of government, which is an irony, right? Isn't that ironic? Like irony, like anarchy is the opposite of government, but anarchy creates government. So you're never going to have anarchy. It's never going to exist. There will always be some ruling class. It's impossible not to. So anyway, BTC keeps falling here. We're now at 59.8, which is very interesting. What are your thoughts on Bitcoin? Do you argue its utility in exferring money from person to person without a bank being involved? See, I personally don't care. You know, maybe I should, but frankly, yeah, I pay my taxes. You know, in the last few years, I've probably paid $15 to $20 million in taxes. It sucks. I'm not money laundering. I don't have anything to hide, and I'm not saying that I want the government snooping my stuff. I don't. I'm just saying, like, I don't ever send people. I can't remember the last time I've had to Bitcoin somebody money. You know, it's like Venmo's convenient, PayPal's convenient. These are conveniences in my life. I focus on the big dollar. I focus on growing my businesses, and I focus on operating within the norms and institutions that exist, rather than, you know, all this other stuff. Yeah, Leighton, you know, a lot of people got defrauded by Sam Bankman-Fried, and that guy absolutely deserves to be in jail a lot longer than CZ. But CZ still violated the law, right? One was a fraud, one just violated the law. So fraud is literally scamming people, and then violating the law is, okay, you broke the law, like now you're going to get your slap on the wrist. That's what CZ's getting. CZ's violating the law, or violated. But there, you know, the whole point of slapping him on the wrist is trying to get him to bring Binance into compliance, so they can actually continue to operate as a legitimate entity, or actually become a legitimate entity. That's the whole point of that. That's why they're not, you know, throwing him, you know, out with the bathwater, so to speak, and keeping him in jail forever. They need him to actually go operate the business and try to bring it into compliance. Anyway, let's listen in over here. Is this politics? Okay, yeah, no, let's flip off politics. We don't have time for that right now. Although it does look like Kamala is going to be next up. Why did I turn off? Excuse me. It does look like we're going to be getting Kamala sooner than later. I really think the announcement is coming tomorrow. I think it's just it's the all-American day, right? It's the all-American day to make the transition announcement. Anyway, Tesla's up about 1% right now. It's down, you know, it's down a chunk from some of its pre-market highs, probably because the Qs are rotating down. You've got a holiday coming up. I generally find there's profit taking before holidays. You've got you know, what is this? BTC down under 60. This is a little bit of a problem. Let's see here. Yeah, this is probably not a very sustainable strategy. I've saved in Bitcoin for the last 4 years, haven't had to study stock balance sheets, PE, cash flows, CEO decisions, and I've outperformed just by saving and doing nothing. Yeah, I would say that's very lucky. but I don't think that's long-term sustainable. So I think it would be very delusional to lie to ourselves and say that fundamental analysis doesn't matter for long-term investing. But that's all right. To each their own, right?
That were just very
Constellation Brands. Oh, we actually had earnings? I swear I thought we were just going to get Polestar and I was going to ignore earnings this week. I was so excited to just not look at earnings for a little bit. STZ. Who picks that ticker symbol? STZ. How is Constellation Brands STZ? I don't know. That's pretty stupid. All right, whatever. Q1 comparable EPS $3.57 versus $3.47 of the estimate. STZ still sees fiscal year comparable EPS of midpoint of $13.65. That's what they had. Net sales pretty much in line with expectations. However, operating cash flow a little lower than expected. Constellation Brands jumps as beer calms concerns. Tell me more about the beer that Constellation Brands sells. Beer margin of 53.4%. Wow. Dang, I didn't know you can make that much money in beer. Dude, we need to meet Kevin beer. Dang, that's really good margin. Constellation brand beer. Beer portfolio. Corona! What? 50% margin on Corona? Holy crap. No way. Modelo, Corona. Oh my, Corona Premier. What? The little, seltzers. These are such a scam, man. 5%. Come on. It's too low. Need an IPA. I need some 9%. Gotta be able to feel it. Anyway, that's crazy. I had no idea. I mean, I guess it makes sense, these brands and alcohol, but I thought beer was so competitive, the margins would be tighter than that. 50% gross margin, 53, 54%, wow.
Worried about the market or because they're earning 5 to 5.5% on their money, and we haven't seen that in so long. I think a lot of it has to do with you're earning a significant amount of interest on your money, so why take the risk when the risks are, in our opinion, so many to the downside. Let's not forget we've got a lot of election risks coming up in the second half of this year. We have earnings that, in our opinion, just still seem too unrealistic for this year and next year, and we haven't seen anybody budge that. But yet everybody's talking about how the economy is going to slow. But earnings are going to be...
STZ, Stars, Constellation. That's dumb.
Revisions coming down. That's when I think it's going to take the wind out of the sails of this market.
What does the election risk look like, Megan? Is it uncertainty? Is that all you need to say? Or do you want to even be more specific? We did have, I thought Lonsdale, Sorkin, that was on, he was talking about either unrealized capital gain taxes or long-term capital gain. He said both would be really hard on entrepreneurs and innovators, if you recall. He said that it could do that. So when you say election risk, what kind of election risk? Other people think, the end of democracy if Donald Trump is elected, that could be a problem for the markets too. Maybe so. I don't know. What type of election risks are you referring to?
I think you kind of hit it there. I think there's a lot around the taxes, a lot around the uncertainty, depending on, if President Trump comes into office, what does that mean for the Federal Reserve? But our biggest concern on the, uncertainty is what are any of these politicians going to discuss about the unbelievable and unsustainable path of debt that we have in this country that's going to have to be addressed. I don't know how, I don't know exactly when, but that I think can cause a lot of volatility, not just around the election, but into 2025.
Right, and I think the solutions.
How interesting. I've been saying it for a while that you have lower inventory risks in California, and now there's a warning here from the Doomers. A rapid increase in new and existing home sales inventories may end up hurting new home builders, especially those exposed to the large spike in markets like Florida and Texas. where Horton, Lennar, and Pulte operate. Yeah, it's the markets where everybody was going to that are very, very concerning. It's one of the reasons I've just been so focused with House Hack on purposely trying to do the opposite of what everybody else is doing. Everybody's like, oh, you got to buy Austin, you got to buy Florida. I go, great. I know exactly where not to buy right now. I'll wait for that cycle to flip. Sometimes just doing the opposite of trend can be really powerful if you have the cojones to diamond hand it. All right. So what do we got going on? We got a little bit of a pop there on the Qs, just popped up a little bit. Nvidia popped up a little bit. Tesla's trying to rise again. You're at about 1.5 right now, which is bullish going into the open. 30 minutes to go. Yeah, Nvidia a little bit of a pop there, and you got your 6 o'clock transition here. So let's listen in to their little 6 o'clock opener here.
We'll be here. Squawk on the Street begins right now.
Gummies. Give them some gummies, I think. Maybe me too.
Good Wednesday morning and welcome to Squawk on the Street. I'm David Faber with Melissa Lee and Mike Santoli. We're live from Post 9 at the New York Stock Exchange. Jim and Carl have the morning off. We have an abbreviated trading session today ahead of the 4th of July holiday. Market closes at 1 p.m. Eastern. Bond markets, and that's the stock market, and we end trading of bonds an hour later. Let's take a look at futures. As you see it right there, we are looking for a bit of a down open. Let's get to our roadmap this morning. It does begin with that big tech rally. Microsoft, Apple, Amazon, all at new all-time highs. Tesla also notching its longest winning streak since last July. Oh. Plus, the Skydance dance, it's back on with Paramount. Sherry Redstone's now backing a deal she previously rejected. We'll give you my latest reporting. That's in just a few minutes.
And Southwest Airlines adopting a poison pill to fend off activist Elliot management.
Let's start with the markets, though, in record territory and new milestones for the tech sector. Great to have two of the greatest in terms of discussing the markets with me here on set. And yeah, both of you.
Oh, I mean,
Melissa's
totally,
looking at who else
sure.
besides her.
No. Far from it.
And so I'd just love to throw it over, get a sense, Mike, as to what your thoughts are, given what we've seen so far this week. Don't seem to be taking a lead, perhaps, in the bond market as much as we have the last 2 days, perhaps?
Not as directly, although yesterday the bond market sort of calmed down a little bit. Yields receded from the prior day's gains. It seemed to open the door. Yesterday's action was really slow in building. Late in the day, we got this rally. Yep, it was pretty much led by a handful of the mega caps. And what is interesting, too, is that the laggard among the mega caps get their turn. And that's what has been this story. NVIDIA was down again yesterday, and Amazon, which, of course, has broken through the $2 trillion market cap level, but has really done very little point-to-point for 3.5 years, or 3 years, let's say, and therefore has this catch-up potential. And, of course, Apple has gotten this little bit of a move, too. And it's essentially been the formula. It's a very split market still. The S&P's up 6% since the end of the first quarter. The median stock in the S&P is down about 1% over that period. So you still have this critique that it's not fully an all-inclusive rally, although yesterday a little bit broader. Some sensitivity to signs of slowdown. Some sensitivity to signs that the continuing jobless claims today remain somewhat elevated. And it just creates this friction about, is the Fed going to stay more patient than the investors can wait? You know, that's kind of the story.
I mean, what we've heard in recent days.
I like this delusion here that I'm seeing on X. It's pretty kind of typical of X. But let me see here. Let me how do I do this? There we go. Okay, so I posted that this scares me going into a holiday. This market momentum and the put option spread right here, both of these being at extreme greed. Of course, then people are commenting, oh, but the greed and fear index is at neutral. Yeah, that's because those are the last two things. I think people, think I'm trying to like hide something or whatever. It's like, no, you dummy. Like these are like, you're already at extreme fear for breadth, for strength, market vol. That'll move very quickly once the other two roll over. But when you have puts and calls at extreme greed, and you have market momentum at extreme greed, as soon as those roll over, you will be at extreme fear. they're like the last two things. So as soon as the momentum stops and goes back to the moving average, the put ratio will skyrocket again. We're at pretty low levels here, which is scary. And then volatility will skyrocket, and all of a sudden this whole thing will be extreme fear. So I will say this probably does make me a little nervous, and I think it's so funny that, you know, when I argue this scares me going into a holiday, these two charts, and say that you forgot the most important graphic. No, like, these are one and the same. We're on the same, like this person, this knucklehead. Maybe it helps if you don't take it out of context or cherry pick two of the indicators. Wrong. They are literally pointing at the same thing. The only reason the average is neutral is because everything else has already rolled over, you dumbass. The only two things left to roll over are momentum and puts and calls ratio. And then you are at extreme fear. Like, literally, you screenshotting this being neutral is literally reiterating how scary these two charts are. Because you double down on the fact that there's little holding the market up from extreme fear. That momentum is extremely high above its moving average. And so, you know, what we almost ought to calculate is like a spread. Like how far apart from the moving average are we? So, you know, right now it looks like we're $400, almost $400, almost. It's like $370. So we had a wider spread right here. You know, see, that was about 400. So it could keep going for a while, but eventually you get whacked. And then that's when you go into fear. So it'll be really fascinating. But yeah, it's not good to see that sitting in extreme fear. It makes me nervous about sort of like wanting to like be enthusiastic about buying the dip. Anyway, let's listen in here. It's one of the reasons I'm like in that 6 to 7 range on the bull bear scale, where it's like, yeah, I'm overall bullish on the market, but there are definitely some reasons that make me a little nervous.
Shift around, and you know, we remember that from last time where you had, you know, the tariff basket and the, you know, the tariff immune basket that would trade off against each other. You see solar stocks getting hit, things like that.
Right.
But beyond that, I think in general, market is kind of on its own steam in terms of earnings growth getting where it's supposed to go, skewed toward the upper end. And then this question of whether the economy is softening in a beneficial way or in a way that we have to be more concerned with.
Right. $4 trillion. We're going to get some companies going to have a $4 trillion market value before long. Right?
Yeah, I mean, we're still at least, what, a 25% move from there, I guess,
yeah.
Thereabouts. You know, so I
know,
don't like
but
to just
NVIDIA went
pencil
from
that
2 to
in.
3 trillion in how many trading days?
Yeah, it was like a month or something.
Blink of an eye, basically.
Something like that, yeah.
Incredible.
Yeah.
Goes pretty fast. All right, so let's see here. BTC now 59.7. Unfortunately, it keeps dropping relatively live here as we've been tracking BTC. It's a pretty nasty omen here, and it does make me a little nervous, broadly nervous about the market. About 23 minutes until the open. We're down about 16 on the Qs. Tesla's at 1.5 to the upside. Rivian's down. Palantir 23. Nvidia is kind of stable around that 70 basis points to the downside. Coinbase down about 2.5. Not a lot of really big underlying movers here. Like, it doesn't really feel like the stock market's actually moving much. Wow, Dave & Buster's is back at $39. Whoa, look at that sell down on D&B. Wow. It's like it literally went right back under its trend line or into its little channel over here. That's crazy. It was trading for 30 to 40 for the longest time ever. Ran almost $70 and gave it all back. Crazy. Yeah, crazy market. There we go. Finally, a little bit of hope there on BTC with a green candle. Let's see how long that lasts. All right, let's listen in here. What is this?
Some sort of liability.
No, Paramount. I don't care about the Paramount deal. I'm sorry if you do, but don't care. What do we have here?
If you think the Fed's going to cut more,
So right now we think, given where we are with regard to spreads, and there's probably a floor in terms of how low rates would go, and we're sort of thinking roughly around 4%, maybe 3.75.
You know, I was actually at Dave & Buster's yesterday, and I remember thinking how when I was a kid, it took like years, but we finally got a gold card, and then they kind of transitioned away from that system. They don't really do gold cards anymore. And I was just there with Jack yesterday, and I'm like, man, when I was your age, all I wanted was the gold card. And as soon as we got it, they kind of got rid of the system. It's crazy. That's funny you mentioned that.
Driven from.
All right, Jack, great getting some time with you this morning. Thanks so much for joining us. Jack Janasowicz there of Natixis. Joining us now with a look at the individual stocks moving ahead of the opening bell this morning. Let's go to Abigail Doolittle. Abby?
Well, let's start out with the shares of NVIDIA because that is one weight on the markets with the major indexes down ever so slightly. Stock is down 0.7% after falling yesterday. And of course, it is in correction territory.
Yeah, this is an interesting comment as well, the Tesla 21-day run. It's possible. If we break, okay, the big thing is if we break this orange line, yes, you're probably 21-day run. And that 21-day run could probably run Tesla up to $300. Now, there's a big risk that, we end up opening and, within the first hour of trade, rather than the stock actually mooning above that orange line, the technical institutional traders, trade this sucker right back under that line because it is such a strong resistance line. So it would be logical to have a large red candle in the first hour or so to move back under that line. But if we break that line and we confirm the breakout, you're probably continuing the 21-day trade. Yep, I agree with that.
Today, and we did have, once again, all new record highs yesterday. Coming up, we're going to give you some international politics. Ukrainian President Vladimir Zelensky speaks to Bloomberg about Ukraine's dependency on global aid and Trump's plan to quickly end the war before he's inaugurated. This is Bloomberg.
Ooh, look at that. BTC wants to U-turn right back to 60 there. Some folks buying that dip-a-doozle at the 59.6. We've seen these drops before. We also went down. I talked about how BTC was likely to go to 58. We went to 58 a few weeks ago, wherever it was. That was another 59 hit. I'll zoom out a little bit. But we ended up going back to 58, and then we promptly bounced off of there. So curious to see where we'll end up today. Yeah, there it was, 58-ish. So what is that? 58.3. A little premature bounce on the 57.5 line. So we'll see where we go. But it doesn't look so bad, the pre-market here. I mean, 15 bips on the Qs. Like, none of this is screaming heavy fear in the markets. So we'll see how things move when things open. But I also don't think we really have any caddies. I mean, what do we have? At some point, we're going to get the minutes, right? Let me see here. Minutes. Oh, okay. The minutes will come out at 11, which is about an hour after the market closes. We are going to get, the market will be open in about, 17 minutes. Then, as far as other catalysts, at 6:45, we'll get PMIs, factory orders at 7, capital good orders at 7, and ISM prices paid at 7. So, some caddies coming at 6:45 and 7. Oh, back to Paramount. How boring. All right, let's go listen to the non-political one.
We're going to ask Brent Brazell about that. Donald Trump is using the Supreme Court's immunity ruling to argue that his New York criminal conviction and Jack Smith's case should be thrown out. So what happens next for Trump's court cases? That is next.
All right, well, there you go. Everybody wants to go on commercial. Okay, fine then. So we'll watch Tesla in the pre-market because it's entertaining. So let's see what else is going on here. Let's see what the suits have to say. Okay. Okay, let's go find out. Oh boy, time for more coffee. Yes, that's what we need. It's another coffee break. That's fine. All right, so let's see. What do the suits have to bless us with this morning? T.S. Lombard. Transatlantic election fever and politically driven trades. That's boring. How about... Let's see here. Goldman, what have they for us? Weekly options watch. Oh, and then it looks like there's a Tesla piece too. Let's find out what they have here. Oh, this has to do with pre-announcements. So they think, all right, let's look at these. Here's some options trades. I always love me some options trades. They're really great at making money very fast. They're also really great at losing money very fast, which makes for a really entertaining kind of trading environment. But anyway, trade 1 and 2. Buy Starbucks calls and CMG straddles ahead of earnings. Okay. Near-term choppiness and sentiment around Chipotle because of portion sizes. And Starbucks has underperformed. Got it. Buy Wells Fargo calls ahead of earnings. Okay. I don't like Wells Fargo. Let's see, what else? Is that it? Oh, what do we got over here? Which stocks have historically pre-announced? Key stocks include... Ooh, AMD's in here. July, a notable increase in pre-announcements. Nearly 8% of all pre-announcements occur in July. Wait, 1 divided by 12 is 8%. Well, that's dumb. See, look at that. About 8% of all yearly announcements occur in July. Okay? 1 month is literally 8.3% of the year. So, like, you basically just called it average. And it looks like that's because January takes the cake. I don't know why this matters. That's nonsense. That just made me highly uninterested. Okay, what else? Goldman on deliveries for Tesla. The key debate now moves to vehicle pricing, margin, outlook for a lower cost model, and some of the other segments like services. Yep, that's fine. Ooh, Mike Wilson has something to say about elections. Ooh, Tesla's starting to rally again here in the pre-market. It hit a dip. It dipped all the way down to only up about 1%. But look at that. As BTC is moving up, you know, BTC had like, this is like a $400 spike here in BTC. As BTC moved up, the Qs started moving up and Tesla started moving up. Apple and Nvidia are flat. Enphase is up about 1%, but it was down more than that yesterday. So it's actually pretty good. If you want to be bullish today, you want this to continue. You don't want it to sell down into the open. But that looks pretty good. That's a really nice volume set here. Let's see here. No, Tesla, I can barely see any volume. Where did I just see it? Oh, it was just here on the Qs I saw a little bit of a spike of volume. All right. Let's go, let's take a peek at Mike Wilson. Oh, Mike Wilson. Investors have turned to the election following last... Oh, hold on a sec. All right. Elections have consequences. Investors have turned to the election following last week's debate. Industry performance on Friday appeared to follow the 2016 playbook, although we note some important differences. Bottom line, election outcomes remain uncertain. We stick to our quality bias. Wait, but this guy was pitching McDonald's, and I hated the idea of McDonald's as an investment. Oh yeah, it's doing the golden arches too. Look, it's the golden arches. It's come right back down. That doesn't surprise me. I don't think these companies have any pricing power at all. Where's my little pricing power?
Short PP.
No, I gotta. I thought I had a. Oh, there it is.
Little PP.
All right. So, following last Thursday night's presidential debate, predict its odds of Trump winning rose to nearly 60%. Yes, differences of 2016. Blah, blah, blah. Overall, we think investors should stay selective with cyclicals. Those were like the Nvidias. Business cycle remains important. On average, volatility picks up in September in an election year and stays elevated through October before decelerating in November. Right. History suggests it's still early for the market to focus on election risk. I believe that. Yeah, I think you'll probably have a gnarly sell-off before the election, but it's way too early, I think, probably, to start thinking about that now. Because, you know, we're just like 5 months away. And I don't think we're going to have a 5-month sell-off if we do have a sell-off. You know, if anything, it'd be like 6 to 9 weeks again or something pretty average. And those are just buy the dip opportunities.
Market. Stay tuned to find out all about it. Let's give you another look at futures. We got about 9 minutes before we get started with this shortened trading session here. You can see, not looking for much right now. More Squawk in the Street when we return.
Pretty stable right now. Looks like, I mean, hey, if you can get a stable day out of this, that's great. You know, get Tesla up a little bit again. No, like, I wholeheartedly expected some form of a give back at the open. I have no idea what's going to end up happening. But let's see here. What else do we have here? We have no news here. Let's try here. Obama privately concerned about Biden. Yeah, that's not good. Initial jobless claims disappoint again. These are nominal. Okay. What about... Wall Street Journal doesn't really have too much exciting other than the underground network of sneaking chips into China, like Nvidia chips into China. But that's not a surprise. You're always going to have a black market, especially for $30,000 chips. The incentives are very, very large. Front page of the Financial Times, Biden is under new pressure to quit. Pro-democracy business group calls for new Democratic nominee. Oh, yeah? Business leaders and donors who belong to Leadership Now, a nonprofit dedicated to renewing U.S. democracy, have urged Joe Biden to pass this nomination to the next generation of highly capable Democrats. Okay. We shall see. Let's look at the betting odds. Yeah, the orange line's like 131.29-ish, something like that. Yeah. Who's running the White House? Yeah. Oh, wow. We just flipped to Harris on Predict It. $24-hour. Whoa. Harris 39. Well, here it says Harris 40, Biden 38. Here you can see the lines converge. Newsom just couldn't keep it up. Partly because you have this whole, like, Democratic POV that, you know, oh, you can't pass up a black woman I always thought the job should be about who's best for the job, not about, things you can't change when you're born. But, maybe that's an unpopular opinion.
As we get ready to begin trading, we talked about Paramount. You can see Constellation on there. You like beer? Well, apparently a lot of other people do too. More perhaps than wine and spirits these days. 8% net sales increase, 7.6% rise in shipment volumes of beer for Constellation. Opening bell coming up. And don't forget, you can catch us anytime and anywhere. Follow the Squawk on the Street Opening Bell podcast.
Are they doing like a practice clap? That's what it sounds like. It's like, oh, let's all practice our clap and our cheer. That's crazy. Oh, a lot of ads today. What is this nonsense? What is this? This is a bunch of hooty-goody crap.
Down a little bit after we hit all new records. Look at the NASDAQ 100 there, 20,211. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, Citi is downgrading Charter to a sell. The firm says the company faces risk to estimates and valuation with the organic broadband environment getting tougher relative to Wall Street expectations. That organic broadband. Next up, BMO is upgrading Permian Resources to an outperform. The analyst says he likes Permian's increased Delaware footprint, noting that that scale, along with strong execution, has resulted in a top-tier cost structure and strong operational performance. And then finally, RBC is initiating coverage on Intuit. With an outperform rating and a $760 price target, the firm sees strong trends for the tax software company, including potential upside from generative AI. Will artificial intelligence be able to understand the U.S. tax code? I think not. Let's take a look at the markets again right now.
I actually think yes. The tax code, if I can understand the tax code, lots of parts of it, I feel like AI probably can too. But I think that might just be the popular opinion. Wow, it's so complicated. It's fine. It's all rules based. Things that are rules based and text based shouldn't be that complicated. Oh dear! I'm gonna get some coffee. I'll be right back. This is ridiculous.
Yesterday, the 2-year at 473, the 30-year at 456. The euro also continues to hover in that range that we've seen right around 107, 108. In fact, it's trading at 107.84 as we speak. Coming up, Jim Caron, Cross Asset Solutions CIO at Morgan Stanley Investment Management, joins us. He says it's not the time for full risk-on positioning.
With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution, before they go public. The future is now open for investment.
In today's volatile markets, you must learn to trade.
Oh man, so many ads. You can't even step away for a second without them playing an ad. What a joke. All right. So, nice recovery on Bitcoin, I have to say. I don't know how long it'll last, but it's a pretty sharp recovery there on BTC. Really nice. You went down to 59.6 there for a moment. Back up to 60,200. Now, keep in mind, you're still below the notable 60,719. These are pretty important lines. Oh, sorry. The 61,741. That's our pretty solid line right here. Although I did upgrade this one to a yellow one yesterday. So just because we did bounce off it, 1, 2, 3, 4 bounces off of it. And then when we broke, we really, we went down. So I upgraded this line to a yellow line yesterday. And we were well off the blue line over here, the 61,741. All right, what are they yapping about?
Would love to see a correction because there's a lot of stocks I would like to buy that I don't own that if they go on sale, we'll be loading up the truck.
Well, that's a good question.
Okay, loading up the truck with, right. Yeah, I like the last thing the one guy said. He's like, oh, so-and-so doesn't think it's time to go full risk on yet. Yeah, I kind of agree with that. but I'm going to get my coffee first.
Support the index and create earnings where they otherwise wouldn't. It's been tough to keep up. So, I think net, everyone's, there's going to be a rush to say this is a contrarian sell signal for the market. We had the biggest bear on Wall Street carried out. It happened in 1999 with Chuck Clow at Merrill Lynch. It's tough to make those calls because, honestly, it's never that perfect. It just seems as if there's just lots of push and pull in here. We had this report of Mike Wilson at Morgan Stanley maybe getting a little bit sidelined at the firm, but he's still there.
Yeah, he is. Although who has the greatest influence these days, if any, amongst strategists? Because Wilson obviously had a great call.
Okie dokie. About 30 seconds to go. This is like the Who Wants to Be a Millionaire time. Bum, bum, bum. Here we go. We're already in the clock. Is Tesla gonna break the line? If it does, I think it's going to 300. Let's listen in. Here we go.
The prediction of the index is kind of a fool's game, and they're just trying to give you the color around the themes that matter in the market.
Yeah, I mean, right. If you can present some facts that are important, maybe it's helpful. Here's the opening bell. Take a look at the real-time exchange back at our headquarters here at the big board. That's the United States Coast Guard doing the honors. The New York sector celebrating July 4th. Of course, over at the NASDAQ, Friends of Firefighters, a nonprofit providing mental health services for the FDNY. All right, I'll throw it over to both of you, see if there's anything in particular in terms of the market and or a particular stock that's gotten your attention as we just get open here.
All right. So let's see what we got here. Just in the first few minutes, it does look like we've got Tesla that's trying to get back to 2% there. I don't know if it'll be able to pull it off. You've got NASDAQ is trying to rally. Bitcoin's trying to move up. You got a lot of positivity in this market. Apple just went positive. Keep in mind, they were sitting at negative 30 basis points. You've got a first red candle coming here on Apple now. Tesla's back to 2%. Very good there on Tesla, back to 2%. Q's first red candle. Those are some big green candles there first. Which way is it gonna go? Which way is it gonna go? What about Rivian goes positive, though you're getting a red candle there as well. Nvidia is trying to climb up to the positive world. Yeah, nice. Look at Nvidia. Let's freaking go. Nvidia pumps. Q's pump. Tesla's got a pump. Q's are pumping. Yeah, everything's actually got a pretty decent pump right now. I don't know if it'll last. See, look how quickly Apple just gave it up. They went right back to their negative 30 basis points. So you got a big red candle on Apple, big red candle on Amazon, red candle on Snowflake, red candle on AMD. Let's see here. Nvidia starting to red candle. Starting to red candle on BTC. Starting to red candle on Tesla. Look at that reject. Right on my line. 122.59 on Nvidia. And first red candle over here on the Qs. Apple goes positive again. So doesn't seem like it's like mega bearish. Or mega clear here in one direction. Let's listen into commentary for a moment.
Which is a tiny part of our case, then think of the upside when we get that catalyst.
Yeah, you have to have an awareness, too, of where it's been, right? So it was at one point a $400 stock. It went into the S&P 500, I mentioned earlier, in December of 2020 at $231 a share.
Wow.
So it's basically sideways since then. A massive, a couple 1,000% gain, from low to high in a couple.
Qs keep moving here, up now 5 basis points. Tesla's getting stuck at about 2.3 right now.
$50 billion market value. Remember, Elon Musk now, I think, is back to a 20% ownership when you include the recently approved compensation, whatever we want to call it.
Red candles coming into BTC. Rivian's going negative. Apple going negative. Nvidia is starting to drop a bit here. You're getting some red candles over here on Nvidia. Let's keep listening.
That's a good point.
I think he does. 1.something% of the company.
Yeah, Ellison is, he's
really okay.
He's really rich. By the way, you mentioned the memes. I mean, the Chewy thing with Roaring Kitty earlier this week. $243 million worth of stock, 6.6%, I think it was.
Yeah.
Stock went down, though, right?
Yeah.
I don't know where it is
had
right
run
now.
up into it had run up a bit into the actual disclosure of
on
the
the dog cartoon.
Right.
And it's down yet again. Yeah, there it is. You get a sense for it this week, but
yeah, it's the classic trading strategy of, you buy the dog cartoon post and you sell the SEC filing.
That is a classic strategy. I know. If Kalanovic had known that, he might still have a job. Yeah.
I'm watching shares of Eli Lilly. Divergence for Novo Nordisk in today's session. Yesterday, of course, both were under pressure on that USA Today op-ed penned by President Biden and Senator Bernie Sanders, urging these drug companies to lower prices to end their greed. That's a direct quote from that op-ed, or we will end it for them. But then Lilly started to pick up mid-session yesterday on full approval of its early symptom Alzheimer's drug, which is now named Kisunla. Doesn't roll off the tongue, but that's what it's called right now. And so we're seeing some follow through from that turning point in yesterday's session into today's session, higher by 1%. That drug's going to be $32,000 a year. But it is it is seen right now as the front runner in Alzheimer's. And it really does sort of underscore Lilly's pipeline when it comes to life beyond GLP-1s. As much promise as GLP-1s have, and their next gen sort of versions of the GLP-1s, there is a whole other side to Lilly that they are working on that they're getting to market. So,
do we know where the government stands in terms of covering an Alzheimer's drug that costs $32,000 a year?
No.
For Medicare?
I mean, that's going to be a pain point. It always is. When a drug comes out of the gate, when it's that expensive, whether it will be covered.
Yeah, I mean, it's sort of remarkable. Before GLP-1s, I mean, this was the main thing that Eli seemed to trade off of, actually, was the prospects for these treatments.
Right.
So it's sort of remarkable that now it's a little bit of an add-in.
Right, it's sort of like a kicker.
Story. Yeah.
It's like a call option. Well, it's not a call option because it's out on the market now. But it does put it out in front in terms of the race for an Alzheimer's treatment. It surpasses now, it is viewed as surpassing Biogen's Leqembi, which is currently on the market. So that's an interesting. But Lilly is up by almost 1%, and we've got Novo down 1.25%. Of course, that CEO is going to be reporting earnings in about a month or so, and then the CEO will be appearing in front of Senator Sanders' committee in September on the topic of drug pricing.
I mean, Lilly, it should be pointed out, is twice the size of any other pharma company in terms of its, you saw at the bottom, its market cap there. Little news this morning out of Southwest Airlines. They put a poison pill in, largely because Elliot has a large stake there. Not much more to it. It's 1 year. It essentially says, if you go beyond a certain point, you get massively diluted. If you're just paying attention now, Elliot has said, or it's been reported, about 11% economic interest.
All right, let's see what we got here. So I've seen McDonald's moving up a chunk here. Tesla's really kind of like slowly moving up. You've got kind of this slow trend up. This is really good for confirming that breakout above that 2.5-year trend. That's a pretty big deal for Tesla. You really want to be breaking out of this 2.5-year trend because it's quite frankly extremely bullish for the company. It's extremely bullish for the stock. So we'll see what ends up coming of it. But big fan of what's going on here. So let's see how it ends up moving. But it looks like you're shaking out the sell orders in the morning, and despite the Qs going red here at 4 bips and trying to rotate down, Nvidia moving down as well, you're still trying to break up to new levels over here on Tesla. BTC is giving you some bullishness again since the AM sell-off that we had, and it does look like you are getting Nvidia that's stabilizing, the Qs are stabilizing. Doesn't really seem like you're really experiencing substantial pain here. Let's listen in right here again.
It is all right. Either you
Southwest.
do what we want, or we're going to potentially at least threaten a challenge for the board, and we'll see what comes of it. But not to your point, Mike. Hard to imagine they would ever want to take control of an airline.
Yeah. Remember, Southwest lowered its revenue guidance, what was it, last week? because of booking patterns and having to adjust booking patterns. It's also an airline which has been under the most pressure when it comes to Boeing issues. They are much exposed to Boeing, more so than any other airline. So they've got a whole host of issues that they're facing. So Elliot might be stepping in at a very vulnerable point for Southwest at this point. But you mentioned Constellation.
Yes.
With earnings.
We can come back to those. Well, yeah, the stock is up a bit on earnings, right?
It is amazing what the beer category has done for it, and the continued gains in market share that they've made after the Bud Light boycott a year ago now. Their beer brands, the Mexican lagers.
I'm just shocked at how much margin these beer brands actually get. I really, really thought that beer was so competitive that the margins had to be tight. Nah, crazy. All right, I'm going to try the Doomers for a moment here. Let's listen to the Doomers.
That, so we need to be a little bit careful in terms of how we connect those two things.
I wonder, nobody ever wants to talk about the election because you don't want to get political, but last Thursday's debate showed us a really disappointing performance from President Biden, and that raises the chances that Trump will occupy the White House. If he does, Larry Summers has said his policies would be extraordinarily inflationary. And indeed, Goldman Sachs has just come out saying that if Trump wins and put those policies in place, that the Fed's going to have to raise rates 5 times. To me, that's a pretty shocking message from Jan Hatzius's team at Goldman Sachs. Do you have to start talking to your clients?
I don't see the Fed raising rates. That seems a little wild to me.
So I think what's interesting about this is that when you ask people the question, will the election be a volatility event for the markets, they say yes. When you ask them, what are you actually doing about it? They say not very much, because it's really hard to discern. If we take Trump's supposed policies at face value, which is tariffs and maybe potentially weakening the dollar and spending and all these various things at the headline level, that could be thought of as inflationary. But look, he's already been president. We know what he's done. A lot of times he comes out and he'll throw a very high headline number out there for tariffs, and he's willing to negotiate it back down. So to the extent that the market tries to anticipate what's the real number, what really actually happens versus what is he projecting and what is he saying, there's a huge gap in between those two things. So
4 minutes, by the way, until we get the services PMIs.
At face value, this could mean, the following inflationary outcomes, and this could be bad for the markets. But if we say what is real, what are you really betting on, and what are you really pricing in? That's what I look to the markets. The market's a better voting machine than what many of the analysts are effectively saying. And what the market's saying is that it doesn't necessarily believe that. Look, if Trump is ahead in the polls as he is today, supposedly, as far as we know, the markets are already pricing this in. I don't think the markets see this. So I think there's a big difference between what the markets are voting on and maybe what Mr. Summers, who I, by the way, admire greatly, is actually saying.
Yep, it's a great point. There's a very big difference between what most politicians say on the campaign trail and then do once they get into office. Jim, thanks so much for joining us. Hope we can have you back soon. Jim Caron there of Morgan Stanley Investment Management. Coming up, one of F1's most wanted gets locked into a new multi-year deal. We'll speak to Pierre Gasly about Alpine F1, his new contract, and future prospects. This is Bloomberg.
Boring. Sorry. It's boring.
And yet are much more apt to put up earnings surprises and earnings acceleration in the second half than the same old.
Boring. Tesla's rallying
today.
Kudlow on
oh
Fox
my
Business.
gosh, they're all on commercial. Or boring. Okay, so what do we have? We have Tesla rallying pretty nicely right now. If Tesla confirms this breakout, it is a really big deal for Tesla. You're going Tesla substantially higher. You're going Tesla potentially 300. It's pretty ridiculous if we do confirm this, because it means the 21-day rally could be back. Now, obviously, no guarantees, but let's just say it's in play. Once you confirm this today, it's a pretty glorious play. And really what you have to do is you have to look at a stock going from sheer pessimism to, euphoria, essentially. And the selling pressure has been had for this stock. So now the question is just, okay, what do you do in the meantime, right? Well, in the meantime, you kind of just sit around and watch it. It's pretty remarkable. So we'll see what happens here. I don't know if it'll hold, but again, we're watching to see if it does. Then you've got NVIDIA here, basically flat. You've got the Qs, also basically flat, which is pretty boring. You've got, let's see here, Tesla kind of just keeps chugging along. It's like the little engine that could, Apple's flat, Amazon's, there's really very little movement here. The only place you're really seeing momentum right now, as far as I can tell, is Tesla. Rivian might try to join that pack. Yeah, 2.5 on Rivian. Some of the energy companies, some of the sold off energy trades are trying to move with it. And you're going to get these green and red candles, obviously, over and over again. But we'll see what happens. But the BTC is actually providing a bit of a bullish tailwind here. All right, let's keep listening in over here for a moment.
Also seeing, guys, the final point here is
ISM data came in 55.3 over the 55.1 expected, and composite 54.8. So no real drama there.
Teleprompter at that event. Ashley?
Yep, he's probably going to need it. All right, Edward, thank you very much.
Pull back here. Let's go to CNBC.
That's where I think that we've got some skepticism. There's no doubt that generative AI is an enterprise-wide transformational technology like the internet was. But like the internet was, it is going to take many years for us to actually understand who the true winners and losers are here. And we think that a lot of this enthusiasm has gotten over its skis. And not all this CapEx is actually going to have very high ROE attached to it in the near term.
Lisa, great to speak with you. Thanks.
It's always great to see you guys. Thank you.
We have services PMI was out just a few moments ago. Let's get over to Rick Santelli for those numbers. Rick.
Yes, thank you, David. These are S&P Global. Maybe the most important aspect is they're the service sector with a composite. And, of course, we are replacing the mid-month read with the June final. 55.1 was the mid-month read on services headline. 55.3 is the new final, so it increased by a couple of tenths, and it still remains the best in over 2 years, going back to April of 22. The composite, very similar. 54.6 was the mid-month. It improved a couple of tenths to 54.8, and it also remains the best level, the highest level over 50 since April of 22, a little over 2 years. We still have the ISM services yet to come at top of the hour, along with factory orders and durable goods. But Squawk on the Street will return after a short break.
Boring. All right. So you're getting a little bit of a consolidation on Tesla. You've kind of seen this happen before, although the Qs are rising and NVIDIA is kind of consolidating as well. A little bit of this consolidation here in Tesla. You are getting declining volumes, which aren't great. Obviously, that could flip pretty quickly here. Rivian seems to be moving 2.5% or so, and we'll see what ends up happening here. So, okay, let's go. I'm going to flip on over for a moment. Let's see what we have for, let's see, Fox. Let's see here.
Almost basically equal to the size of the global economy. How concerned are you about this massive debt bomb out there, both in the United States and around the world?
Oh, Ashley, it's extremely concerning to the consumer, to the investor, you name it. This is the problem with running your economy on a sugar high, essentially, where you continuously need more and more and more of these debt infusions in order to keep the illusion of growth going. And eventually it all comes crashing down. It's very much like a drug addiction, the way the government has been running this economy. You need greater and greater doses of the same thing in order to get the same effect. And it's all going to end in disaster if we don't clean up our act and get our fiscal house in order.
Yeah, you have to pay the piper eventually, as they say. EJ, thank you so much for joining us today. We do appreciate it. Covered a lot of ground. Thank you, sir. All right, coming up, Florida's new law, which allows squatters to be arrested, goes into effect today, and now other states want to follow suit. We'll have more on that story. Treasury Secretary Janet Yellen.
It's really what you need, honestly, is you need to be able to have squatters get arrested. It's kind of crazy that they have squatter protection laws, but oh well. Keep your properties occupied and you don't have that problem.
She said no. Sorry, Janet, but firing up the grill for tomorrow's 4th of July cookout could be much pricier. We're going to break down exactly how much costlier next.
It feels like summer.
Oh, yeah, that's how to get demonned. All right, what else do we have? I think we have data. We have ISM data coming out at 7, so in about 10 minutes, we'll get ISM data. Let's listen in here.
In the team, I obviously met him earlier, a couple of years ago, but yeah, properly in his Alpine role. He's extremely motivated, and I definitely welcome anyone that wants to contribute positively to the team, and he's got huge experience, a lot of connections in the F1 world, and definitely want to see Alpine right at the top. So we're sharing the same ambition, the same targets, and yeah, I'm looking forward to work with him.
You think he's talking with Andretti? I mean, FIA has said if Andretti wants a spot on the grid, they should think about buying Alpine. He's obviously a great negotiator as well, and as Americans, we care about Andretti. What's your take on that?
This won't happen. Alpine's not for sale, and Renault CEO Luca De Meo has said it number of times already. So I think Andretti's got a plan to come in F1, and will be definitely great to see them getting a spot on the grid. But yeah, definitely the Alpine is not for sale, and the ambition is definitely to make it to the top of Formula One.
Do you have a preferred engine supplier if Renault doesn't make the power plant for the new rule change in 2026? It's been talked about a lot that you could become a customer. Would you like to buy a Mercedes motor, for example?
Well, my preferred option is the fastest engine available. I want the strongest package possible to win races, and obviously the car is one element, the engine is another very important element. So yeah, just we'll always support the strongest.
Whatever. This is boring. Oh my lord. All these different things are all nonsense.
Into a reality.
All of them are trash today. All of them, I say. Okay, so a few things going on. Nvidia is consolidating. It's basically going nowhere. You've got McDonald's that tried to rise and it's giving up. You got the Qs that are trending up decently. 13 basis points. That's not that bad. You've got Bitcoin that's trying to play bullish over here. Tesla's getting a little stuck. I'm a little personally worried about the MACD rolling over here on the 1 minute. If we go to the 5 minute, you still have plenty of divergence over here. I still got, as I like to say, the orange man over the blue man. That's just a quick little reminder that I like to use because sometimes people get confused with the orange and the blue line. I usually like to say when the orange man is on top, the stock market usually goes up. Sorry, that's just the trick that I like to use. And so orange man goes on bottom, it usually goes down. The thing about trading is it's not always right. So keep that in mind. Okay, NVIDIA just tried to pop up a little bit. Nice little pop on NVIDIA. You've got the Qs that are, again, also still trying to push. Very nice. And BTC is really trying to get back to at least the 67 line right here. That's the 60,700 line. What I'd be watching for is I'd be watching Bitcoin to run to this here and potentially reject off of this. So I'm going to be very watchful of this right here. This moment is a big deal. So we'll watch for this very closely. We'll see what happens here. As far as other movers, Enphase has kind of been looking like a long lost friend that just kind of keeps bleeding out. And unfortunately, it's probably just too early to really buy the dip here. I don't know if it's going to be an earnings catalyst or what, but Enphase just keeps bleeding out, which somewhat signals that the market is somewhat discounting even Tesla's energy business, which I'm very bullish on their energy business long term here. Don't like consolidation patterns like this at all. Part of me thinks there's, like we've only got about 3.5 hours, 3 hours and 5 minutes of trade left here. So, I don't know. This is a little tough one to find a direction in. Is it possible that, right now it seems probable that Tesla is going to officially break out of this, right? Is it possible that Tesla goes back under the line? Well, let's consider that here. What would it take to go back under the line? So for Tesla to go back under the line and not break out, we'd have to go sub 230 today. You'd be looking for a sub 230. So you'd really, in order for Tesla not to confirm this breakout, you're betting that Tesla's going to go down. Oh, let's see here. Let's go to 22975, let's say. 22975. I'm going to divide that by 2385. You'd really be betting that Tesla's going to move down about 3.5%. Basically, you're betting that Tesla would go negative. So if you think that Tesla's not going to be hold this breakout, you need Tesla to move down about 3.5%. Right now, it's actually moving up more. So it's a tough bet to make, and it's the unpopular bet to make for sure. But this is a very, very critical line. Supporting this breakout would be very, very good for Tesla, and I believe there's a good chance that it'll run well beyond where it sits now in the event that happens. Now, as far as NVIDIA, it's trying to go positive. I mean, when you look at the 5-minute, you're probably trend up here. Yeah, trend up on the 5, nothing super delicious. I'm kind of surprised that Rivian gave up its run like this. Some people might say that this is because Rivian's not anywhere near as good as Tesla. Others are going to say, yeah, this could be an omen for Tesla. Who knows? But Rivian's really been trying to pump it up for a while here after their Volkswagen partnership. And you've really had a struggle getting back to that 1595 level where you previously sat when that Volkswagen partnership got announced. As far as Apple, you are sitting at 44 bips to the upside, which is exciting. Apple's got some really nice runs going here. Apple's got the runs, and I'm still a big fan of their on-device AI, so we'll see what happens here. Let's listen in for a moment.
Keep a close eye on all the markets. The Nasdaq hitting a new record intraday high, by the way. We're back right after this.
Oh, it's like the second I come over, they switch to being boring.
Future is now open.
Oh my gosh, all of them. I feel like today's like commercial day. Pretty remarkable. Let's try Varnes. He's got to be here. Nope, also on commercial. All of them are on commercial. You get a commercial. You get a commercial. You get a commercial. Everyone gets a commercial today. Yeah. What the hell? Ladies golf. I don't want that crap. What the hell is this? Yeah, I know. Where are my ads? Get life insurance in as little as 5 minutes by going to MetCard.com/life. All right. So we've got ISM coming out. within the next 3 minutes. So let's see what happens with the ISM numbers. We have the Qs sitting nicely up 12 bips. I mean, it's not a bad day. You know, you got a decent move here on the Qs, and I mean, this is kind of what you would want to see. You've got Apple that's happy. Amazon tried breaking the 200, sort of getting rejected off that. You could see Amazon right here. Yeah, yesterday I was sitting at 200. What else? I don't know. It's pretty straightforward. Oh, Embraer's up 2.3. AMC's at 529. Sounds like the college savings plan. Matterport, $4.30. Ethereum's at 3,300. Dell's rotating. Why is Dell rotating down like that? See that? Where are they? Oh, they're only down 13 basis points. Who cares? And BTC is pre-rolling over a little bit. Didn't quite make it. So Tesla's really getting rejected by something here. It looks like it's, I mean, presumably it's getting pre-rejected by 240. You really want to escape that orange line as quickly as possible. So it'd be nice to see some more momentum for Tesla's sake, but look at that volume declining. Now, you know, when you get a volume breakout, you can go in either direction. You can go way up or you can go way down. So I'll be watching this one very closely. So, okay, let's see what we have. Give me my numbers, baby. Where my numbers? And ISM numeros. Come on, baby. Come on, give it to me. Here we go. ISM prices paid come in slightly weaker than expected. It's good news. 56.3 versus the 56.7. Services index comes in pretty weak, though. 48.8 versus 52.7. That's no bueno. That is bad. Somewhat. Now you're going into recessionary, contractionary territory. That's not good. Employment goes to 46.1, well below the 49.5 expected. That's not good. New orders tanks. Oh, my God. 47.3 versus 53.6. That's very bad. Durable good orders, 0.1%. Ex-transportation, negative 0.1. So transportation helped a little bit. But factory orders coming in big negative. Negative 0.5 versus the 0.2 expected. So bad for factory orders, bad for new orders. In general, on services as well. You got downward revisions on factory orders too. No, those are like recessionary numbers. Okay, they're yapping about Tesla. Those are recessionary numbers. Hold on a second here. These aren't good. Let me clarify these. So I really want to understand this for a moment. So I'm gonna write this down and kind of think this out. So factory. Let's do this together. All right. Factory orders were expected to come in at 0.2% on survey. Result was negative 0.5% and a downward revision of 3 basis points. Let's listen to him over here.
Lower yields and stocks should be doing better. This is weak data. Factory orders supposed to come in a positive number, up a couple of tens, comes in down 0.5%. Down 0.5%. That's the second weakest month-over-month change of the year outside of January. One is minus 2.3. Doesn't end there. Strip out transportation, it gets even weaker. Down 0.7. Down 0.7. And both the factory orders and ex-trans were downgraded a couple of tens from last month. Down 0.7 is the weakest also since January when it was down 0.9%. Now, the following numbers are May finals. We replaced mid-month read. Durable good orders mid-month read was up a 10. It remains up a 10. Ex-transportation was down a 10. It remains down a 10. Capital good orders, non-defense, ex-air had a whopping down 0.6 on our mid-month read. It remains down 0.6. That's the weakest going all the way back to September of 22. And if we switch gears from orders to shipments, down 0.6 as well. These are weak numbers, and it doesn't end there. Services side, the most important part of the economy to many, and what the Fed keeps monitoring, believing if that slows, inflation slows. Well, it's slowing. ISM Services headline number comes in at 48.8. This follows 53.
These aren't great numbers at all. This is a sign of some serious slowing in the economy.
Prices paid went down. That's a good thing, from 58.1 to 56.3. 56.3 is the lowest level since just March, when it was 53.4, which really does raise a flag a bit. It's going down. That's good, but we've been there, done that to a greater extent. Now, the employment, considering ADP was a smidge light and closed tomorrow, but come back Friday for the big June jobs report, 46.1 on the employment index. It remains below 50. The first month of the year was above 50. 46.1 is the weakest of the year, going back to December of last year. And finally, on the new orders, 47.3. 47.3, that's the weakest level going back to Dece of 20. So interest rates moving down a bit. We're now hovering right around the 436 level in 10s. That's down 7 basis points on the session. David, Wilf, Melissa Lee, back to you.
Rick, thank you.
Yeah, 7 basis point decline in the 10-year. That's pretty wild. Let me look at the 2-year just to see where the 2-year sits. The 2-year Treasury is sitting at down 5 basis points. So you're still getting a little bit more inversion there, recessionary inversion.
NASDAQ hitting a new high today, coming off its 22nd record close of the year. So that age-old question we like to ask here numerous times a day: how much more room is there to run? Fidelity Investments Director of Global Macro, Urian Timmer, joins us. Urian, love to start off with you on earnings, because believe it or not, we get started, I think, late next week with the banks. Where are you in your estimates? Have you seen any erosion?
Oh, man, going into earnings? Oh, no.
Earnings as we head into yet another season.
Well, good morning. It's interesting that the earnings estimates are usually drifting lower by now, because, as we all know, companies like to guide lower and then surprise those lowered estimates. They like to under-promise and over-deliver. But the estimates have been really holding in very steadily, and the calendar year estimate for both this year and next year are actually rising when they normally would be falling. So the earnings cycle seems to be in a sweet spot here, where earnings, which drifted lower last year, are now accelerating higher. So the Q2 year-over-year growth rate that is estimated by the consensus, estimates on Wall Street, is at around 9%, and the last 2 quarters came in much lower and then had a very solid bounce of about 5-6 percentage points. So it looks like the second quarter we could end up with double-digit growth, which is where the forward estimates for the calendar year are also growing at about 12% year over year. So the earnings cycle is accelerating, which is obviously a bullish underpinning for the market cycle.
Yeah.
What do you think is more vulnerable at the moment, Urian? The equity market to a significant fall in prices, or the long end of the bond market?
I think
Does anybody think it's weird this guy's like in his garage?
The rate cycle is. So, I have some models that indicate that the bond market, the 10-year yield, is at around fair value, 4.25, 4.5. That's pretty much where it should be based on where the forward curve is and where nominal GDP has been averaging. The Fed, of course, is at 5 3/8 with a bias to ease, and it has prudently been holding off on that, because it's much better to wait too long than to go too early and then have to take it back. And the economy doesn't seem to be, hanging on for dear life, waiting for those for those rate cuts to happen. But certainly the core PCE number from a few weeks ago certainly gives the Fed a little bit more margin to maybe launch that first rate cut, in the coming months. And then on the long end, I think the days of zero interest rates are behind us. So I think there is a limited amount of scope for yields to fall, even if we go into a recession. And at the same time, we are in an era now, emerging era of fiscal dominance that does raise the risk of an occasional rate tantrum like what we saw last fall, what we saw obviously in 2022 in a much bigger way. And so, I can't rule out an occasional push towards 5%. And the last few times that that's happened, the stock market did wobble. So I do think we're in an era now where it's rising rates that wobble the stock market rather than falling rates, which is a reversal of what we've experienced over the past few decades.
Urian, finally, the AI boom, I believe you say is real, and I think many would agree with you. That hope for higher productivity. It's interesting. It came up yesterday in Sarah's conversations with Powell and Lagarde and the Brazilian central bank head as well. Productivity-led growth phase, but what about the debt side of things? And I'm curious as to your thoughts as well, given you included it in your talking points here.
Yeah, so fiscal dominance is a big problem, of course, for the rate markets, for all markets, and the deficit is currently 7%, even though the economy is in a pretty resilient.
I'm trying to figure out exactly where this guy's head is. Like, it seems like he's like, it's like things are okay, but I don't like. I don't know. It's confusing me a little bit.
So then, really, the main hope is to outgrow the debt. Much the way.
Oh, okay. Well, yeah. I mean, this is like, if you can get a productivity boom with artificial intelligence, of course you can just outgrow the debt, and then it's like our fiscal problems aren't really problems.
It really needs to come from productivity, right? The speed limit for the economy is labor force growth and productivity growth. So if the AI revolution or boom is the great hope that lifts the productivity ceiling for the economy at large, then it gives us a hope to outgrow the debt. Because if GDP growth is above the growth in the debt, then you avoid a debt cycle. But we have to see how it all pans out.
Yeah.
This is not a overnight story, of course, but that is something we can pin some hopes on.
Yeah, to be continued, as we say. Urian, hope you get to enjoy a nice bike ride over the July 4th holiday. Thank you.
Of course, they had to reference the bike. Okay, cool. Well, I've got a flight to catch soon, so we're gonna jump on over to the course member live stream. Let's go ahead and push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. There it is. Thanks so much for being here. We'll see you on the next one. Goodbye.